Breaking news from Cnbc is sending shockwaves across global financial markets as Federal Reserve Chairman Jerome Powell publicly stated that banks today are allowed to provide Bitcoin and cryptocurrency-related services as long as they operate within existing regulatory and risk management frameworks. This single statement marks a historic turning point, not only for Bitcoin, but for the entire structure of the global financial system, because it confirms that digital assets are no longer viewed as an external or hostile element, but as a component that can legally coexist within the traditional banking framework. For more than a decade, Bitcoin existed outside the banking system, often portrayed as a speculative experiment or even a threat to financial stability. Banks remained cautious, institutions stayed on the sidelines, and regulators responded with warnings rather than clarity. However, Jerome Powell's remarks signal that this era is ending. The question is no longer whether Bitcoin will be accepted, but how it will be integrated. This shift in tone from the Federal Reserve is not accidental. It reflects a broader recognition that financial innovation cannot be stopped, only guided. When Powell emphasized that banks can engage with Bitcoin and digital assets provided they comply with regulations, he effectively removed one of the largest psychological barriers facing institutional adoption. In global finance, confidence is built on signals, and this signal came from the most influential central bank in the world. It does not require a new law or executive order to change market behavior. A statement from the Fed chairman is often enough to reshape expectations, strategies, and capital allocation decisions across the financial sector. This moment is particularly significant because it arrives at a time when traditional financial systems are under increasing pressure. Global debt levels continue to rise, inflation remains a persistent concern, and trust in fiat currencies is being tested in multiple regions. At the same time, Bitcoin exchange-traded funds are gaining approval. Institutional custody solutions are expanding, and blockchain-based settlement systems are quietly being tested behind the scenes. The financial system is evolving, and Powell's statement confirms that regulators are adapting rather than resisting. The integration of Bitcoin into banking does not mean chaos or the collapse of traditional finance. On the contrary, it represents a controlled evolution. Banks are now positioned to offer custody services, facilitate crypto payments, and provide regulated exposure to digital assets. This transition moves Bitcoin from the fringes of finance into the core of regulated capital markets. Retail adoption has always been gradual, but institutional adoption happens at scale, and once banks participate, the acceleration becomes exponential. What makes this announcement even more powerful is its global implication. This was not only a message to American banks, but a signal to financial institutions worldwide that the era of outright exclusion of crypto is over. Central banks, regulators, and investors across the globe are now forced to reassess their stance. Bitcoin has crossed a threshold from an alternative experiment to a recognized financial instrument. This is not the end of the journey for Bitcoin. It is the beginning of a new phase. Regulations will continue to evolve, infrastructure will mature, and banks will adapt to remain competitive in a changing financial landscape. Bitcoin will continue to operate as it always has, decentralized and permissionless, while simultaneously being adopted by institutions that once dismissed it. The system is changing, and as Powell's statement makes clear, everything is coming.